FOMO is responsible for more trading losses than anything else. It's the reason why you can't pass your funded challenges. It's the reason why the statistics for successful traders is so low. And in this video, I'm going to show you how you can fix FOMO quickly so that you can get yourself funded and you can start pulling consistent payouts from the market. Now, before we get into it, make sure you comment below your biggest trading psychology challenge. Firstly, if you don't have an edge, then you don't know if where you're putting your money has a potential return. Secondly, if you don't have a mechanical trading plan, you're leaving your decisions up to how you feel on that particular trading day. So there's an inconsistency in the way you execute. So step number one is you need to have a trading edge, and then you need to disseminate that trading edge into a mechanical trading plan, knowing exactly where your entry and exits are. Now, when you go through and backtest previous data to confirm your edge, you're going to create a sample space of trades. Let's say, for example, 100 trades. I've only got 10 here, but let's imagine 100 trades. Now, at the end of that sample space of trades, you're going to have a total net return. You're also going to have a strike rate and an average risk to reward. Now, it's crucial in order to have certainty in your trading edge to be able to see this and recognize that at the end of 100 trades, you're going to have a variation of outcomes. You're going to have losses, you're going to have wins. But at the end of the 100 trades, your wins are going to be greater than your losses, and as a result, you're going to have a net return. Part of the reason why traders are drawn into trades with FOMO, into this impulsive decision making to jump into trades, is because deep down they don't have certainty in their edge. And secondly, they don't have a mechanical trading plan to guide them through the millions of decisions any trader can make on a given day. So when you have certainty in the long-term profitability of your edge, and you have certainty in your mechanical trading plan, it guides you exactly how to enter into the market and exit out of the market. And you have this perspective that even despite losses, at the end of the larger sample space, you're going to end up profitable. You realize that even if you take a loss that day, it's not the end of the world. So you calm your amygdala, you calm your emotional response because you have a broader perspective. Most traders caught into FOMO narrow their perspective. They think that this individual trade is going to make or break them. It's going to be the end of the world. And they have this fear of missing out on all these things they attach to that trade. Not only the profit and the percentage, but the opportunity to pass a funded account, or the opportunity to pay rent, or the opportunity to share this in their community and increase in social value in that community. So the fear of missing out comes from that drive to impulsively capture after all those things, because deep down, and when you dig, you'll realize that's because of a lack of certainty in your long-term trading edge, which is driving this addiction to being right on every individual trade and take profit on each individual trade. If you do this exercise of backtesting and seeing the larger sample space and broadening your perspective, you just relax a little bit as a trader, and you realize that I've got a broader perspective. If I take a loss or if I miss a position, it's not the end of the world. There's an abundance of opportunity out there, and I know losses are part of the game. They're going to help me average out my monthly and yearly return, and I know I'm not going to win every trade, and if I miss a position, it's not the end of the world. I've got a certain strike rate, I've got a certain reward to risk, and I'm just going to be certain in that. So instead of being this erratic trader who's driven by fear of missing out and goes on these states of boom and bust and deviates from their trading plan to try and capture after a certain win, or capture after the things they associate to that win, the pleasurable outcomes they associate to that win, you calm down as a trader and you don't get caught on this boom and bust cycle. You see, traders who are getting caught on the boom and bust cycle, what happens is they take a couple wins, they get overconfident. They think they can predict the market. And because of that state of overconfidence and minimizing of risk in the market, they deviate from their trading plan and they force low quality setups into the market. And they get humbled by the market. And then they get put in this state of anxiety and in drawdown in their funded account and feeling like they're on the back foot. And then they have this strong fear of missing out on those profits that they think can pull them out of that state. So the more you calm your emotions and your amygdala, the more you stick to your trading plan because you have certainty in your edge and you have a trading plan, a mechanical trading plan, then you lower the probability of falling into FOMO. Because FOMO is driven typically by this desire to get out of a state of anxiety or feeling like you're on the back foot or feeling like you're in drawdown. It activates your amygdala and it makes you impulsive as a trader. It keeps you stuck in the boom and bust cycle. Now, the top 1% of traders, the traders that go from FOMO to funded, those traders that manage their emotions and calm down their psychology, are able to stick to their trading plan and they don't get caught into this FOMO state. Because on each individual trade, they're not seeking after a win or trying to avoid a loss. They're not trying to make back losses and trying to seek after wins and the opportunities they think those wins can provide. They've transcended this lower level thinking of outcome-based thinking, which is all about winning and losing on the individual trades. They have a broader perspective and they realize that an individual win doesn't mean anything. It's helping average out previous losses and future losses to give me my monthly average. What really matters is my end of month average. And this individual loss, it doesn't matter. It's just helping average out previous wins and future wins to give them my monthly average. And they don't get elated when they win. They don't get depressed when they lose because they have a broader perspective. They know what their monthly return is on average. So they get out of this desire to win and this avoidance of loss, and they focus on what I call true winning, which is just being calm, poised as a trader, and sticking to your trading plan. And when you consistently stick to your trading plan and you consistently execute your edge over a large sample space of trades, you approximate that edge you know you have, and you have consistent profitability. And that's how you start pulling consistent payouts out of the market. So what's critical as a trader to go from the bottom 99% of traders who are caught in FOMO and in fear and deviating from their trading plan to the top 1% of traders who break out of FOMO and get funded is to be able to manage yourself, is to be able to manage your psychology, and to be able to manage your greed and fear response, and to be able to learn to self-govern and self-equilibrate and manage your expectations before every trade. Because if you're creating these grand ideas about what you think a trade's going to give you, and you're associating all these outcomes to that trade, even unconsciously, a new funded account, pay rent, social recognition, a new car, a new watch, a certain amount of profit, and you're associating that to that outcome, that trade, even unconsciously, then you're going to have fear of missing out on that. And you're going to be emotional. You're going to fear losing that. You're going to fear missing out on that. And you're not going to be able to stick to your trading plan. You're going to be drawn impulsively to capture that fantasy and capture that infatuation, as opposed to being grounded, poised, sticking to your trading plan and having a broader perspective. Now traders, I put together a 14 or 15 minute video called Watch This and I'll give you a bulletproof trading mindset. I want you to go onto that one and watch that so I can show you what mindset you need just before you trade to ensure you can have consistent profitability and consistent payouts. It's going to pop up on your screen either here or here. Go in there and click it, watch the video, and make sure you start implementing the tool that I share in that video. Now I'm going to set a challenge. I want you to consistently do that for a month. Use the principles that I share in that video and use the tool consistently for a month to help you stick to your mechanical trading plan. And I want you to message me at the end of the month and tell me how much in funding you've secured.